All right, happy Friday.
Yeah. Happy rainy Friday.
Happy rainy Friday. Yeah, that's right. We're both in our sweaters, our rainy day sweaters.
Exactly. It's so cold here in California. It's got to be like in the low 50s.
Well, it was in the 30s, this week. That was pretty cold.
Yeah, there was frost on the ground
Yeah,
when I went running, I saw. So,
yeah, and it hailed today at our house. My wife, I'm at the office today, but 2D sent me pictures of the hail on the ground in our house today.
yeah, that's cool.
Yeah, it's feeling like tax season though. Definitely, you know, working hard and anticipating weekends and a lot of work here over the next couple of months.
Yeah, the nesting period of getting ready for tax season is over, thankfully, or almost over, and now it's just like nose to the grindstone for
Yeah,
the next 11 weeks.
yeah. Um, I thought we ought to talk about a couple of things that I think are relevant and relatively urgent or immediate in nature. One is the PPP loan, the never-ending topic. I feel like you and I, every time we talk, we try and make sure we're understanding everything. The PPP loan's always on that because there's always all this new information about it. And so part of that is there is this second round of the PPP loan that we talked about previously. But the big pressing issue for us right now is the deductibility of expenses that were spent from forgiven PPP funds.
Yeah. So we know we can deduct those for federal tax purposes, but the big wild card at this point is what is California going to do about that? And we've been kind of chatting back and forth of, hey, are we going to have to extend these tax returns until we know what California is going to do regarding this?
Yeah, and frankly, until last week, I didn't even think there was any rumblings that California would allow these expenses to be deducted. I mean, the tax projections we did after the tax changes were made at the end of December on a federal level, we went back and changed tax projections to take a deduction for federal purposes. But I never contemplated that California would allow this deduction. So now, this week there was a bill introduced, AB 281. Uh, the author of the bill is Assemblywoman Autumn Burke, and she's the chair of the Assembly Revenue and Taxation Committee. She was also the author of AB 1577, which excluded from taxation the cancellation of the debt.
Okay.
So it seems like she's high ranking, and there's a good chance that this could pass. I mean,
Right.
we know that California is going to have a big budget problem and that they are wanting revenue, but hopefully that there's a chance just for simplicity and I don't know, fairness. I think that this might pass.
Yeah. Yeah, for sure. Otherwise, we've got this, well, what I would say like M1 issues where adjustments between federal and state tax that we'd have to track or make an adjustment for, I guess, between federal tax and California tax, which would be a huge adjustment for taxpayers.
So for our clients, I think the big impact here is number one, there's a chance that amount won't be income. And so the amounts that we've projected, or if we didn't, if we weren't engaged in projections, the amounts that you might have thought you might owe may be less. And number two, we don't know. And so there's a good chance if this doesn't happen in the next 30 days, the only real solution is going to be to extend tax returns and consider paying in just in case, or if you feel bold, you don't pay in, assuming it's going to get passed.
Yeah, and wait. So extend and wait essentially,
Right.
or file and have to amend later on.
Right.
Which is interesting. I don't know, we haven't gotten into that here on this podcast, but for partnerships, you probably want to file an extension anyway, so you don't have to go through the administrative adjustment process. So almost want to file an extension for every partnership anyways. That way you can make the correction and file an amended return as opposed to go through that administrative process, which sounds like it's a total pain.
Yeah, yeah. So the article that I'm reading this from is from Spidell, who we love. They're a tax service for CPAs that specializes in California tax information. And the bottom line of this article says, if you and your clients would like to see this bill enacted, please contact your legislators to let them know your opinion and urge them to pass this bill as soon as possible. So I thought I'd just pass that on. To find your representative, go to findyourrep.legislature.ca.gov.
Or just call Governor Newsom directly and tell him. Oh wait, no.
Oh man, I'm gonna hold back on the comment where look for him at the French Laundry.
Am I like trying to poke you here?
All right. So the other thing that I think is just immediate potential help to our clients is this California Small Business Relief Grant Program. So we've talked about this before. California has a grant program. It's called maybe I just said this, but California Small Business COVID-19 Relief Grant Program. And the reason this is urgent is the second round is now available for applications beginning February 2nd, which I think is Tuesday next week.
Yeah.
And the applications close on February 8th. So there's a small window to apply for these grants.
Okay.
So basically, small businesses that were impacted by COVID can apply for a grant up to, I think it was up to $25,000 for the business.
Yeah, that sounds right.
So that's, for small businesses out there, I mean, we have them. We know that there are small businesses out there that are hurt by COVID. This is a good program to apply to, take advantage of everything that's available to you.
Yeah. Cool.
So I wanted to make sure we talked about that, so people could take advantage of that.
I had a couple of things. I think they're more related to kind of administratively, how do I, now that we've got some of these payroll tax credits and deductions, like how do we account for them on tax returns? A couple of things that I saw in some of the material I was reading is if you received a payroll tax credit when you paid for your employees' sick and family leave, you got a credit for that amount on your 941, reduced your payroll taxes, you actually have to increase the gross income on your business return for the amount of that credit. You still get the deduction for the wages, but you have to increase the income for the amount of the credit related to the sick and family leave that you got on your pay return. So something that's you're going to have to track, especially since it's on a totally different type of form. It's on a payroll return. You're going to have to make sure you transition that over to your corporate or partnership return. So something I saw the other day.
Yeah, that makes sense. We hadn't thought of that before, but that makes sense. Very kind of typical when you get a credit, like let's say a solar credit. They give you either the credit or the deduction. They're not going to.
Mm-hmm. Yeah. And then we kind of discussed in our staff meeting the other day that, employers were allowed to defer the Social Security taxes on their employees, and they had to repay part of it in 21 and then the other half in 22. We saw that self-employed individuals could do the same thing, which was kind of a surprise. And so if you have a self-employed taxpayer, you're going to be able to defer the 1/2 self-employment taxes for 2 years as well.
Yeah, that'll be interesting. That's another one of these nuances from all the stuff that we, hadn't really thought about. I've got another nuanced thought to this is, we do a lot of tax returns for clergy and pastors who have to pay Social Security tax on their wages because that doesn't get withheld by their employers.
Right.
What if they'll be eligible to defer that as well, even though they're technically not self-employed?
Yeah, I mean, obviously the ones that have elected out won't have elected out of Social Security. They obviously wouldn't, but the others, I would think, yeah, I don't know. That's another nuance and another question for sure.
So yeah, I think our clients should expect that we'll be raising that for them. For our self-employed clients who are paying self-employment tax on their profit on a Schedule C, we'll be raising that and saying, is this something you want to take advantage of? That self-employment tax, they wouldn't have to repay it until December 31st, I think, 2021 and December
Right.
2022. Do you know how that gets reported? Like if we prepare a return and we calculate, okay, well, this taxpayer has, $20,000 in self-employment tax and we want to defer paying 10 of that. How do we, have they released any guidance that you're
Yeah,
aware
I think that there was a line item like on worksheet 3 or something. I remember we talked about that was a reduction in that amount, I think.
Okay.
What I saw.
Great.
The other thing about, just kind of deferring payroll tax, it's crazy. Deferring payroll taxes and just payroll taxes in general has gotten so much more complicated this year because of it. But the interesting thing on the repayment of those payroll taxes, and we were kind of working through that as well, is as a firm, I believe that you're going to have to go back and amend like all your prior 941s,
which are the quarterly payroll tax returns.
The quarterly payroll tax returns to reflect when you finally do repay those payroll taxes. Like that's the only way I think to show that everything is square with the government.
I would be surprised if they don't come up with some, they've got 11 months essentially to come up with some different way of doing it by December 31st.
That would be, yeah, that I agree with you. Hopefully that's just, hey, we haven't had time to really, we're focused on the PPP thing. We don't know how to do that yet.
So back to the self-employed individual deferring one half of their self-employment tax.
Yeah.
I think we discussed this, but will they still be eligible to take a deduction for their self-employment tax, their one half self-employment tax?
I'm pretty sure that they can.
I think so too.
I think I saw that. Yeah.
So complicated.
Yeah.
Here is crazy how complicated all this is.
I was talking to another CPA yesterday, and it feels like the volume of changes that we've had in the last 10 years, let's just say, with the Affordable Care Act, then the Tax Cuts and Jobs Act, now with the CARES Act, over the last 10 years, it's been insane. If you think about it, and maybe we're just, giving ourselves pats on the back here, figuring this out. But it seems like to me that the biggest act before that was 1986.
Right.
And then all of a sudden it was 86 to 2010, hardly anything, just minor changes, tweaks here and there. 179 went up, or maybe the estate tax, as opposed to blowing up the whole tax code.
Yeah. Yep, I agree.
So
the Accountant's Job Security Act.
Exactly.
All right, anything else to discuss?
Nope, I think that's it.
All right. It's currently not raining, but I think it's supposed to keep going. I'm going to actually get a haircut for the first time in months.
Nice.
And then enjoy the weekend. I'll be working tomorrow. I'm sure I'll see you either in person or online working.
Inside haircut?
I think so. I hope
outside
so.
outside in the
I hope
rain.
It's not outside in the rain.
Where your
It'll make the school a lot easier for them.
Yeah. All right. Yep. I'll be online tomorrow.
All right. See you tomorrow.
Bye.